Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video I'd like to look at the USE minis, but in particular I'd like to look at the Russell Index, which is the TF, which I've got on my chart here. I don't tend to look at this one much, but I wanted to follow up on what one of our MTPredictor customers was doing in our trading room yesterday, so I thought it's good to follow up on that. So first of all, let's have a look at the large degree trend, because we always start with this, and for you guys who've been following along with these videos will know that I've been paying a lot of attention to this in recent videos. So for this we go to the higher time frame. So from a 3-minute chart we go out to the 15-minute chart. Then what we do is we put our DPs, and these are decision point levels, but we put them on the higher time frame chart. Why do we do that? Well, because they're leading indicators. In other words, they're on the chart in advance before the day, well in this case, before the day even opens. So what I'm going to do is I'm going to use our trading mode here, and I'm going to jump back to the previous day's close, which was there. So this is the 8th of May. So this is what the market would look like before yesterday even opened. So we go back to the prior main pivot high, which is here. We right mouse click, we place the DP on, which is there. And now if I turn trading mode off, you'll see what happened for the rest of the day. But before I do that, I want to stress how this level would have been on the chart even before yesterday even opened. But the main thing is they're on the chart in advance. They give leading areas of support and resistance. I'll now just turn trading mode off and drag that DP along there. And as you can see, the market yesterday went up into this level. It then declined down a bit, went up, and then made a second attempt at a high there as well before the market started to decline down. But the point being is both these attempts were in this decision point resistance level. And also if we have a look at what the pattern was up into this high here, we can also see that it was actually a nice 5-wave sequence as found by the software, 1, 2, 3, 4, 5, with the high right up there in the minimum wave 5 WPT, which you can see there as well. So let's have a look at first of all what one of our customers was doing on a shorter term chart, and then let's see what unfolded for the rest of the day. So I now go down to the 3-minute chart. Right, what our customer was doing was actually having a look at the first attempt up into this higher time frame resistance, which was here, and was looking at this on a VSA spike, in other words a volume spike analysis. In other words, we were looking at this bar here, and he saw this bar went up, it made a new high above the previous day's high, so an important high there, on a red VSA bar you see on our volume down the bottom there. The next bar that failed to follow through, which was this 10:06 bar, so he set up a trade where the market was likely to fall, and his target would have been the DP from the prior pivot down here. So he set up a trade using our manual risk reward in and around that high there. Potential profit was 7.6 times greater than initial risk. Remember, that's what we like about MTPredictor, is we use correct position sizing to keep our initial risk small and our potential profits large. Now this didn't unfold as anticipated. You can see the market got down to around about 4-hour profit, 3.94-hour profit to start before it started rallying back. So my advice at the time yesterday was to put your stop to break even. So I think the customer would have probably been stopped out around here for a break even trade. I've shown this example first as a deliberate example of a trade that did not work out as anticipated. It's important to understand that not all trades do, not all analysis does, but it's all about how you control your risk and your profits and losses in the longer term. So here this particular example didn't unfold as anticipated, but it would have been a break-even trade, which is perfectly okay. Right, now I'm going to take off the risk reward analysis. I'm going to take off that DP and then see what happened a bit later in the day. Well, the market went back up into the high here. And if we go to the 15-minute chart, you'll see that it actually made a DP sell up here. If I just take the elliott wave intermediate off, clear all elliott waves, you can see it actually made an automatic DP sell up here at this same resistance area. So there it is. If I place the analysis on, that's what the 15-minute chart would have been saying. So at around 12:15 we had an automatic DP sell at our DP resistance on our 15-minute chart. That set the large degree trend to down. Let's have a look what happened on the shorter term chart. Well, on the shorter term chart, we then had an initial decline. So this high here I've got as the high on our 15-minute chart. We had initial decline down, we had initial correction up. This correction up unfolded in ABC. In Elliott wave terms, this would be classified as a wave 2. So after a wave 2, we then anticipate a strong wave 3 kind of decline. You can see we actually had a history triangle followed by a TS3 sell. Now both of these were at the same high, so it's a double top. So you would have actually done your analysis on the first one to start with, which would have been a TS4 sell there. So the question being is, yes, the large degree trend was down, so would you have played it into the first target for just a 2.2 hour profit? Well, no, you wouldn't, because as I said a little while ago or earlier in the video, that we are anticipating this to be a wave 2, therefore we're anticipating a wave 3 decline. So how do we know where that's going to be, or how do we project a target for it? Well, we have a WPT tool here, or a wave price target tool. So for this we just come down to WPT down, we select wave 3. We can see it requires 3 clicks by the small picture there. So the first click is on the high of the start of the sequence, which would be the start of the wave 1. The next is the end of the wave 1, which is down here. The next one, sorry, is up there. Sorry, that went a bit quickly. What I'll do is I'll just do that again. Sorry, I went a bit quickly there. So I'll do WPT, WPT down, wave 3. First click, start of the sequence. Second click, end of the wave 1, which would have been here. Second click, end of the wave 2, which would have been here. That then projects a level for where the wave 3 is anticipated to go. Remember again that these are on the chart in advance. In other words, they are here before the market even gets there. So what I can do is, if I just clear that off, I'll just do this again just to show you by going into our training mode, jump, and I'll come back to here. That's where our TS4 sell has come in, you can see. So we'd have placed the analysis on, but we'd have said, well, actually we're anticipating this to be a wave 3, so we'd have then put the wave 3 target on. I'll just do that a little bit quicker now this time. Bang, 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 and therefore we're anticipating the market to go down to here. So let's just grab and drag, and that would be a potential 6-hour profit. But can you see how this is all set up just as the trade comes in there? If I skip forward, it will just be taken in by one tick there, just about. Skip forward, skip forward, skip forward. A TS3 sell would come in, but we wouldn't have been stopped out because it was a double top. Skip forward, market starts to decline. If I turn training mode off, you can see that the market then went down to this low here, which would have been the perfect place to come out with the 6-hour profit. Now this is what I call a Holy Grail trade setup, not because it's a high reliability trade, it's because it has a profit that's much greater than the initial risks. In other words, we're looking to trade a wave 3, which is the strongest and longest in a completed 5-wave sequence, and we're looking to get in at the wave 2, which was there, which has the small initial risk. So that would have been a great trade to take using the MTPredictor tools a bit later in the day. And of course it was all set up by us knowing on the higher time frame chart, which is what I had a bit earlier here. I'll just take that off and put that back on, so it just has the DP level, knowing in advance that that was an area of higher time frame resistance, and therefore set the 12 o'clock or 12:05 high as being a major high. Remember, we knew that resistance zone in advance, so we knew that this was an important high up here, therefore we could play this as a potential wave 1, a wave 2, looking for a wave 3, and that was the trade setup as found by MTPredictor. So a very good day for MTPredictor yesterday on the Russell Index, particularly a bit later in the day after the high came in and we got that initial decline down there. So a great example of an MTPredictor Holy Grail trade setup on the Russell Index yesterday.